Halima, what are the market implications of this deal between the U.S. and Europe?
I mean, I think it's important in terms of making a dent on trying to reduce Europe's dependence on Russian gas. It's 15 BCM. We still have a ways to go, though, if we're really going to cut Europe's dependence by 2/3. The question is, where are the additional supplies going to come from? It looks like we're probably going to be rerouting additional supplies that might be going into Asia, into Europe. But already we have about 60 to 70% of U.S. LNG currently going into Europe. So the question is, where are the additional volumes going to come from?
The other question, Ian, is geopolitically how it changes the equation for Europe. As Halima said, it's still going to take a long time to wean Europe off of Russian gas.
It is. And I mean, obviously, one of the great and tragic ironies of this war is the fact that the Europeans right now are funding it. They'd like to get away from that as quickly as humanly possible. By the way, there's still real possibilities that the existing gas and oil gets severed, irrespective of the fact that the Europeans really need it, both because the Russians might decide to take those steps themselves, and also at major cost, but also because if the Russians decided they were going to, for example, use chemical weapons, something that the Americans are increasingly and realistically concerned about, I can't see the Europeans maintaining their energy consumption from Russia in that circumstance, irrespective of the cost it would have on their economies.
Is that already in the price, Halima? The potential added sanctions and an embargo from Europe on Russian oil?
I could not agree more with Ian. I mean, if we had a chemical weapons attack, I mean, they've put a lot of pressure on Germany to basically say, we are going to seriously restrict Russian imports. It also could mean that the U.S. Congress passes secondary sanctions on energy exports. I think the big question, though, for the market is, I'm not sure they're actually pricing in that type of scenario yet. I think they're basically saying Russian flows are being affected because of self-sanctioning by companies, but we don't have the major embargoes by countries that take significant quantities of Russian crude. So if we got secondary sanctions, that would be material in terms of how much additional oil would come off the market.
It's sort of confusing, Ian, to figure out the picture right now, because we know that there are still buyers of Russian crude, right? India, China. How much evidence do we have of that? And how does it sort of reshape the world order around energy?
It absolutely reshapes the world order, because the point is that you can even imagine in a negotiated settlement and the Russians were to pull all of their troops out, and we're very, very far from that. You're still going to have a permanent decoupling of Europe from Russia over the medium term. I mean, when you consider Putin to be a war criminal, as not just the American president, but many global leaders from NATO presently believe, you're going to do everything you can to cut your economic ties. And the fact that that can't be done immediately doesn't mean it won't be done over 2-3 years' time. What that means for the future of Europe, as you just asked, it's the end of the peace dividend. It's vastly more money being spent on defense, much more focus on national security. And it's an ongoing level of confrontation, direct confrontation between NATO and Russia. Whether or not there's a frozen conflict in Ukraine, that confrontation with permanent NATO bases and deployments in the Baltic states, for example, with Finland and Sweden wanting to join NATO, where the Russians said there'd be military consequences for that, with the Germans spending 2% of GDP plus on defense, and all of these countries sending massive amounts of weapons to the Ukrainians to defend themselves, while Ukraine has a government that is as opposed to Russia as could humanly be and sitting right there on their border.